We're going to dive into the exciting, for some people, yet pretty risky world of penny stock trading. And it's all about those low-priced, high-risk stocks that can either make you a fortune or just leave you in the red. So let's talk about this. So these stocks, they're usually valued at under $5 in the US. And they do offer the potential for some serious gains if you pick the right one. But there are significant risks involved. They are notorious for their lack of transparency and liquidity. And that makes them the perfect breeding ground for fraudulent schemes like the pump and dump. So now, when we talk about penny stocks, we often think of those pink sheet stocks. Those often come with limited information about the company. So this lack of information does put you at a higher risk of running into some scam. But you trade penny stocks listed on the formal exchanges, you're going to reduce the likelihood of falling victim to these. Not always, but sometimes. So to navigate this roller coaster, really, of a market, you really got to do your homework. You got to do research. That's always your best friend. And stock screeners can help you out as well. Also, pay really close attention to technical setups. And don't forget that there is a high level of risk involved. Now, due to the lack of transparency and liquidity and the potential for scams, you have to be really aware of those downsides. There's scams out there, like the infamous pump and dump schemes. These are all over the place. There was that $16 million that was lost during the Squid Game token scam. And just recently, $100 million. This involved inflating stock prices with misleading information through Twitter and Discord. And then these guys sold at a profit when the price peaked out, never telling those people in the Discord or following on their Twitter. So you got to stay cautious and be skeptical of any sudden and unrealistic price moves or the exaggerated claims that usually come with them. But there's a bright side. There are rewards, and despite all these risks, there have been some success stories in penny stock trading. Penny stocks, they can experience explosive price movements. So picture this. You see these rapid and pretty dramatic price increases, but you can capitalize on those swings, and you can pocket profits. Just don't be greedy. Now, some of these penny stocks, they do represent undervalued companies that have real growth potential. So if you can spot these kind of hidden gems and invest early, you could ride that wave of their future success. But if it's being pumped up in Discord and Twitter, be careful. And also, we can't forget there's a low entry cost. Buying a penny stock is not going to break the bank. You can buy lots of shares at a pretty low price. So that means a significant return on a small initial investment. That can happen. So we covered some risk and rewards. What about some practical tips? Well, for starters, focus on technical analysis and chart patterns, right? Read the stock's market language. What's the price doing? Dive into the historical price and the volume data to consider the future movements and identify trends, support and resistance levels, entry and exit points. You got to find the right broker. You want a reputable broker, offers competitive commissions, some fees, reliable trading platforms, and they do have some research tools. It's not all doom and gloom if you're looking at penny stocks. So the world of penny stock trading, it does have a lot of risks and rewards, and it's not for the faint of heart. But you can do this with some knowledge and diligence and a little bit of luck. You could potentially benefit from this market. So if you found this helpful, hit that like button, subscribe for more, and we'll talk to you soon.